Did you feel that jolt on Friday? The stock market took a serious tumble, wiping out trillions in value, all thanks to renewed fears about the US-China trade war. It felt like a punch to the gut for investors everywhere. But hold on, is there reason for optimism? It appears so. Stock futures are bouncing back after former President Trump stepped in with a reassuring message, but the situation is still quite fluid, and the road ahead is far from certain. Let's dive into the details. U.S. stock futures showed signs of recovery Sunday night, attempting to rebound from the sharp sell-off experienced just days before. This glimmer of hope followed statements from former President Donald Trump suggesting a more conciliatory stance on trade relations with China. Remember, it was his initial comments that triggered the market chaos in the first place. Specifically, Dow Jones Industrial Average Futures jumped approximately 373 points, translating to a 0.8% increase. The S&P 500 futures also saw a significant rise, climbing by 1%. Nasdaq 100 futures performed even better, surging by 1.3%. These numbers indicate a renewed, albeit cautious, optimism among investors. This shift in market sentiment appears to stem directly from a post made by Trump on his social media platform, Truth Social. In this post, he seemed to backpedal on previous threats of imposing massive increases of tariffs on Chinese goods. This potential policy reversal offered a sigh of relief to investors who had been bracing for a full-blown trade war escalation. The original threat sent shockwaves through the market, resulting in that dramatic $2 trillion loss in market capitalization on Friday. That's a lot of money vanishing in a single day. It really underscores how sensitive the market is to geopolitical tensions and policy announcements. Here's an excerpt from Trump's Truth Social post. Don't worry about China. It will all be fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The USA wants to help China, not hurt it. Former Vice President J.D. Vance also weighed in, echoing a similar sentiment. Speaking on Fox News over the weekend, Vance suggested that the U.S. is willing to negotiate with Beijing if China demonstrates a willingness to be reasonable. But here's where it gets controversial. Vance also emphasized that the U.S. holds far more cards in this negotiation. Is this a sign of strength or a recipe for further conflict? It really depends on your perspective, but it's a point that deserves close attention. These combined statements from prominent political figures seem to be encouraging investors to cautiously re-enter the market after the panic selling on Friday. However, it's crucial to remember that market rebounds based on verbal assurances can be fragile. Last week painted a grim picture for the major market indices. The Dow Jones Industrial Average declined by 2.7%, while the S&P 500 and Nasdaq Composite fell by 2.4% and 2.5% respectively. The S&P 500's 2.7% drop on Friday alone marked its worst single-day performance since April, a period when the market was still reeling from the initial shockwaves of Trump's earlier tariff announcements. This volatility highlights just how much influence policy decisions have on the stock market. But, and this is the part most people miss, trade tensions aren't the only cloud hanging over the market. A looming government shutdown is adding to the uncertainty. As the shutdown stretches into another week, the next federal payroll deadline, October 15th, is fast approaching. This means many federal employees could miss their first paycheck, which could have ripple effects throughout the economy. Adding another layer of complexity, earnings season is about to kick off, with major financial institutions leading the charge. Citigroup, Goldman Sachs Group, Wells Fargo, JPMorgan Chase, Bank of America, and Morgan Stanley are all scheduled to release their quarterly results on Tuesday and Wednesday. A slew of regional banks will also be reporting their performance. These earnings reports will provide crucial insights into the health of the financial sector and the overall economy. Will they offer reassurance, or will they fuel further market anxieties? Quick recap. Trump says, don't worry about China. To summarize, former President Trump attempted to calm investor nerves with a Truth Social post aimed at easing concerns about escalating U.S.-China trade tensions. This came after a previous post on Friday that triggered a significant market downturn, resulting in the S&P 500 experiencing its worst day since April. In his post, Trump stated, "Don't worry about China. It will all be fine." Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The USA wants to help China, not hurt it. So where do you think this is all heading? Is Trump's reassurance enough to sustain a market recovery, or are the underlying economic and political uncertainties too significant to ignore? Will the upcoming earnings season provide clarity, or will it add to the confusion? And perhaps most importantly, is a conciliatory approach with China the right path forward, or does it embolden unfair trade practices? Share your thoughts and predictions in the comments below.